Hi, Greg Lewis, Metastock Software. Hey, you're about to watch one of the great presentations from our recent online trader summit. I know you're going to enjoy it. If you do not yet have Metastock, make sure you visit metastock.com/traders-summit 3-for-1 for a great 3-for-1 offer for Metastock plus market data. Also, make sure to listen to Jeff Gibby at the end of today's presentation. He has a really great offer. It's very exciting, and I know you're going to want to hear it. Finally, make sure to leave us some feedback. We always want to hear your feedback, and subscribe to our YouTube channel. Thank you so much, and successful trading.
Yeah, Chris is coming into the room. I'm sure Price is here. We're fairly good on time. Price Headley, geez, what am I going to say about Price Headley? Price Headley is a rock star. I love Price Headley. He is one of the things I like most about Price Headley is really the mentality he takes to trading. You know, one of the things that he likes to say, and hopefully doesn't say it today, I'm about to spoil it, is, you know, he's an options trader. He trades options. And the big core concept is, you know, there's 4,500 or so optionable stocks right now. How do we find the best ones? There's always opportunities. Let's focus on finding the best opportunities. And he's spent 20, 25 years, probably longer than that now, in his research of finding the ways to identify those opportunities. And he's, well, let's just get him on here. So here we go. Let's go. Price, I'm gonna go ahead and turn on your microphone.
Hey, Jeff, how you doing there?
Good. How you doing on this day before Easter?
Oh, just fantastic. What a great way to finish off the quarter here with this awesome event you guys put together.
All right, let's get you the screen here. Is there anything that you'd like to add to that glowing recommendation I just gave you?
No, I can't top you, Jeff. You know that, but I'll just try to live up to it here today.
Okay, awesome. The floor is yours, man.
Hey, thanks, Jeff. It's great to be here, and great to see a fantastic crowd here as always on these Metastock summits. I've just upgraded my lead consultant Chris there to help answer questions through our hour or so together. And I know Jeff and I have worked for a number of years on our Big Trends toolkit that I know he's already referenced multiple times. It's a fantastic value as part of this package today. But I'm going to try to just narrow down today in my presentation to just one particular technique out of the dozen plus that you get in the toolkit that I really like to use on the FANG stocks. And we like to leverage these FANG stocks with weekly options. So we're going to keep it simple about one particular pattern and indicator today and highlight a number of case studies. And just a reminder that before I get into it, everything that I share with you today is for your information and education only. Nothing that we talk about here should be considered a specific recommendation to buy or sell any particular investment. As you know, you are 100% responsible for your own investment decisions. Big Trends and its staff are not responsible for any trades you choose to make. And not all Big Trends products and services are going to be appropriate for all types of traders and investors. You always have to keep your risk level in mind and adjust your trading accordingly. At Big Trends, we don't provide any personalized financial, tax, or legal advice, so you should definitely consult your tax advisor before you make any investment that might impact your unique tax situation. So with that understood, we're going to talk about what are FANG stocks. I'm sure most of you know about the FANG names, but a lot of people tell me they're not really participating because those stocks are priced so highly. A couple of them over $1,000 a share, more than $100,000 to buy 100 shares. No, let's not commit that kind of capital. Let's do it with a lot less using weekly options. So I'm going to talk about some of the benefits of weekly options. In particular, why I love weeklies on these higher dollar FANG names. You get even more bang for your buck, in my experience, when you know what you're doing. You've got to be careful not to know just enough to be dangerous. My goal here is to try to have you understand some key concepts, but then of course we teach you through our FANG options trader program with weekly training as well as specific real-time trades. I'm going to share with you my number one indicator today that helps me define a trending stock, and we're going to zero in on kind of a quick trading to maybe faster swing trading type of time frame, usually over just 2 or 3 sessions. with this approach. Sometimes that can be in and out in the same day, but a lot of times we're trying to stretch it. The best trends typically ride for several sessions in this faster swing trading approach. We're going to zero in on a number of case studies. I'm all about modeling success. Now, when you've heard about the FANG names, I'm sure, and the traditional FANG names, where the acronym comes from, the F for Facebook, ticker symbol FB, of course, A for Amazon, N for Netflix, G for Google. Of course, they renamed themselves Alphabet, but its symbol is still GOOGL is the big one that we like to trade. And the bonus one we throw in is Apple, because Apple is such not only the biggest stock out there in the stock market, approaching $1 trillion of market capitalization, but it also moves a lot still. So you still get the benefit of some meaningful trends up and down. As you know, in this past week, it was more of a down market until the bounce back at the end of the week on Thursday's final day of the quarter. I got a little bounce, but bottom line is that we were able to cash in on a Google bear trade in the midst of that downturn. So as long as you know how to trade these both ways, you shouldn't really care which way the markets are going as long as they're trending. As Jeff mentioned, I really care about the bigger trends on any time frame. I'm not talking, when I say big trends, I'm not talking about multi-year outlooks. I mean, we have that too, but it's big trends on any time frame. So if you're trading an intraday chart, where's the meaningful trend move that you can actually profit from? Not that every trade's going to work, but that, if it doesn't work, we can get out quickly, keep our losses small, and if it does work, we can truly let our winners run. Every textbook tells you how to do that, but very few actually show you the mechanics and the specifics. That's what I'm going to get into today. Now, why should you care? Again, past performance doesn't guarantee future results. I always think it's interesting. When we had a little give back into the latter part of last year, a lot of people said, "Oh, you've topped out. This system's not working anymore." And then we had our biggest month on record in January to the upside, and more gains made in March as well. Now that this month is behind us, bottom line is that over 20 months, this is all the profits and losses added up before commissions, based on never putting more than around $1,000 on average or less into any one trade. So about $6,200 in profits over 20 months. If you break it down on a month by month, you can get a feel for, the win rate is in the neighborhood of about, 65% or so, I would say, is a typical target, about 2 out of 3 winning months. But what I care about is when we're right, how big can we win? When we're wrong, how much can we limit the damage? When you were seeing, a number of examples on here where you're seeing some really nice juicy gaining months, 890, almost 1200, and then the January biggest month that we had on record, 2656. March, didn't get a chance to update this chart, but even better than this through the end of the day on Thursday, the month's close, thanks to Google. I'll show you that as an example next. But bottom line is, compare that to probably a couple of worse months. We'd been keeping it in the neighborhood of 560 was our prior worst month. We had a couple of bumps there in November, December, and people said, "Oh, this is no fun anymore, right? This isn't working." And then that just under $1,500 of give back was made up with a 2,600 plus gain in January. Past performance doesn't guarantee we're going to always make it up that quickly in the future, but we have a lot of confidence in this method because of what I'm going to show you today. And I'm going to get into the indicator more, and I'll come back to this chart, but just to show you how we added on to our gains at the end of this month here, this gains this past week. This is a Google bear trade. We're going to get into the indicator and what we're looking at here. But the main thing I want you to focus on and think about today is this green line on the bottom panel. We look at a lot of things, and as Jeff will share with you about the Big Trends Toolkit, it absolutely zeroes in on a ton of different stuff. But I'm just going to focus on one technique today, the ADX. Okay, so ADX stands for average directional movement. What I want to see is that green line going up, and preferably from a low level. And when that happens, in this case, the negative directional movement is in red, the positive directional movement is in blue. That means we're getting more negative directional movement in the definition of lower lows. Thus, the downtrend, you can see it's already starting to form. We're not going to ever catch the exact top. You can see we're already starting a downtrend here on Google. We're trying to catch that phase where the trend gets more consistent, more persistent. And you can see in this case, we bought a Google put option, a 992.5 strike put. That means we had a right to sell Google shares at $992.5. It's like we said before, the stock's trading the stock's trading around 1,000, that means 100 shares is 100 grand. Well, we're controlling that almost 100 grand worth of stock for under 1,500 bucks in this example. So that means we're about 1.5% of the cost of the stock we're getting to control that stock with this option. And when the stock drops into that next day, we're getting a 60.8% gain that next morning. Actually, it was put on in an afternoon, midweek, sold out that next morning. That doesn't guarantee it's going to bounce back, but we said, look, that was a sweet spot. The trend wasn't keeping going to the downside. We needed to hop out. I'll get back into the mechanics of ADX here in a minute, but I want to get some feedback about what kind of trading group we have with us today. If you could just type in the chat box, I didn't get a chance to send Jeff a poll on this, but just type in a number here. If you're a day or quick trader, 1 or 2 days, hit the number 1. Swing trader, 3 to 5 days is my traditional definition. Hit the number 2. 3 is a position trade, 1 to 4 weeks, or active investor, number 4, 1 to 12 months. Probably don't have any buy and holders in here. I encourage you not to buy and hold, especially in this market. So we're getting a lot of 1s, 2s, and some 3s, maybe 1 or 2 4s, but mostly the quick trade variety, which is good, and some swing trade as well. So that's really the sweet spot that I want to focus you on today. It doesn't mean that there's not opportunities on other time frames. I hope Jeff will show on the Big Trends Toolkit. I mean, some of the daily charts are incredibly powerful for sometimes months, where you can see these big trends get set in motion. But we're looking for the big trend in that faster 2 or 3 day window, and the 1 and 2 kind of hybrid there is what I'm going to zero in on today. But again, take these lessons, apply it to whatever time frame you like to trade. Just all you got to do is this. It works across multiple time frames. You just got to adjust the time frame you look at. We're going to look at intraday charts today and show you how we set this up. Now, we use a lot of tools for trading. Obviously, Metastock has been so good to me that bottom line is that I'm really pleased to work with Jeff over all these years to create such a fantastic toolkit. Now on our 3rd iteration, we just added in brand new breakthrough indicators that you can't find on these other platforms. So right now, Jeff and Metastock are the beneficiary of kind of our newest technology that's just available on Metastock right now through our Big Trends Toolkit. But what I want to talk about today, as I said before, the average directional movement is going to be our keying indicator we want to zero in on. There's a lot of other pieces that go into our FANG option trader system. We use a moving average filter. We're looking at how average true range and the directional movement all set up. But essentially, once all that comes together, this creates what we call our trade funnel. This is going to help us to narrow our focus on fewer opportunities that I think are the higher quality trade opportunities. And I would rather you trade less often and trade with greater confidence than trade too much and then chop yourself up, lose your confidence, and then you're nowhere. My view is that you've got to always protect your confidence, always protect your focus, always put quality ahead of quantity. So if you think about it in life, a lot of times I see a lot of people that have a very much of a quantity focus. Well, why should I buy 1 when I can buy 5? Why shouldn't I get this cheapest thing here and get a whole bunch of it? And my view is I'd rather have less of a really good thing and truly enjoy it, not just in trading but in life, than basically too much a quantity that basically ends up diminishing the entire experience, and you're basically then overloaded. That's why we have all these self-storage warehouses all over the U.S., because people have too much stuff. They've just gone on acquisition mode, and they haven't really focused on the things that they actually really need and enjoy. This is going to tie in to trading here as well, because when you have that quality first focus, you're going to be a much more confident and much more effective trader. So we're going to just take the biggest and best of what the market has to offer in very tight windows. And if it doesn't fit anymore, we're going to say bye-bye. That's no longer a top quality trade. I'm done. I'm moving on to the next one. So from this perspective, it starts with the DMI lines, the directional movement lines. Essentially, Wells Wilder, the same guy who also invented RSI, developed this concept of the true range for a stock, and he said it should include the amount of a gap. See, most prior true ranges only measured the high-low as your daily range. Everybody knows the high minus the low is your daily range, right? But what Wilder said is you're not factoring in, if we gapped up, that from the close of yesterday, if that's below today's low, you've got to include the positive gap as part of that daily range. And so he called that the true range, and he developed this ATR, average true range, averaging the daily true ranges out over time to show you when you're getting more of that movement than essentially what everybody else was looking at. So he was actually able to spot these bigger trends by having that gap included. And so his DMI lines he has a positive one that shows you the net new highs, and the DMI minus, which shows you the net new lows, a negative DMI. And so if you're getting a situation where you're getting higher highs and higher lows, you know what that's called. That's called an uptrend. You see the up channel, higher highs, higher lows. That's going to help you to see, okay, you're getting a rise in the positive DMI line, you're getting a fall in the negative DMI line. That gap widening between those directional movement lines is what we're going to look for with ADX. So ADX is the average directional movement. That's going to show you when the DMI plus and minus lines are starting to pull away from each other. In an uptrend, the DMI plus surges up, the DMI minus comes down. In a downtrend, it goes the other way. The DMI minus, the net new lows are going to surge up, and the positive, you're not making any new highs, that's going to come down. And so that's going to show you a bearish trend. And so Wilder divided the directional movement into the true range to give you kind of a percentage calculation that you compare one stock to another. Now, when you go in here and look at, here's a prior bull example with Google. What we're looking for here again on the bottom panel is, well, first of all, let me just show you when ADX is going down, the green line's going down there. You can see that green line going steadily lower here as you follow the green line down. Guess what kind of an environment that is? That is a range, that is a lack of trend. Guess what? We don't even try to trade that. We don't attempt to try to catch support and resistance and even try to get into that game of buying low, selling high. Because if you do that, you will not be ready when it starts to break out. You'll think, well, I should be selling high again as it breaks out when we get our buy signal, and then you won't be in the right mindset. So part of this is don't try to be a jack of all trades. Really become an expert at one particular pattern and just keep on hammering in that pattern. That's what's made me successful over nearly 30 years of trading, is saying, look, I've got a variety of strategies, but when I'm just doing the ADX strategy, I don't do anything else on that particular bit of my capital. I say, look, this is just applied for the ADX strategy. I could have some other capital that was just trying to trade ranges, and we do have other programs that do some of that and do some spread trading and things like that. But the point is that whatever your edge is for a particular methodology and for a particular chunk of your capital, zero in on that and really don't try to do anything else with that bit of your capital. Just focus. And that focus is so valuable. So in this case, we had an 1142 strike call. So when Google was a bit higher, obviously it's gotten knocked down with the Facebook news and concerns about privacy and whatnot. It's funny how that goes in cycles. A couple of years ago, everybody said, oh, you get, who needs privacy when you get so much more at your fingertips? And I thought that's kind of a strange argument. And now everybody's like, oh yeah, we need privacy again. Bottom line is the market moods will shift. You just need to adapt, and your indicator should adapt to show that. Now, the particular setup here is that you see the positive DMI on the blue line here, the negative DMI on the red line. And when the ADX here, again, I'll just put an A on it here, if the ADX starts to turn up from a low level below both of the DMI lines, and then we actually go and see that ADX cross above, I'm highlighting it here, putting an arrow on. This is a 30-minute chart, by the way. We're showing you multiple platforms. But of course, Metastock, it will show this to you in real time. And so at that close right there on that white circle, we're getting a buy signal here for this one around 1140 on Google. So we're buying an 1142.5 call. It used to be one of our rules was not pay more than $10 for an option, but because of Google and Amazon having surged over $1,000 a share, we now can go up to $15 an option. That's still just $1,500 max to control 100 shares. And so the principle here is that, okay, at that point, at the end of the day on the 13th, I should say at the end of the day on that Friday, this is an intraday by hour, that's about 2:30, I should say, on the 30-minute chart, that you're getting a situation here in which you can see that we're now going into trend mode. And obviously, you say, well, gee, of course it's going into trend mode. You can look back and see that. But what I care about is in real time, as my friend Alan Farley calls the hard right edge of the chart, basically the thought is, okay, at that point when you're that's your live data point. You're looking back at those old highs and you're saying we're at the top of the trading range. And what the ADX shows you is that don't get caught up looking backwards because we're about to change. We're in the process of going from range into trend. And so, of course, you see what happens is we go up, and away. We basically don't make a new low against the prior bar's low until about in here. And so what ADX shows you here is that, okay, you see how the DMI lines finally start to kind of top out. And some would tell you, oh, well, you've got a negative divergence here. It's not making a higher high in the positive DMI and all this stuff. I say, look, just keep it really simple. Watch when ADX starts to roll over in green. If the ADX starts to roll over here, we're going to get our exit right about in this area here, just over 1160. That's about maybe a 22-point move up, and that option the next day it was up 121%. So again, those are kind of the best case scenarios. If you can double that fast, obviously that's wonderful. If it keeps going, we'll keep going with it. Sometimes they do. Most of the time, at some point you're going to get some kind of a rollover. Part of what we'll also do is we'll put a kind of a trailing stop to protect our profits. If something starts to get volatile interbar, we got up on a gap up and then it starts to flip down on us, we will trail our profits, and we'll talk about a couple of examples of that here. But this is a case where another warning I would have for you, if you're using ADX, you say, oh, well, Headley says when it rolls over, okay, that uptrend's over, so I should now bet on the other side. Absolutely not. One of the moving averages filtered rules that we have is that if we're in a positive moving average system here, that you can see that we got a positive plus sign there, that's going to be a situation where you don't ever take a bear trade above that moving average. You only consider bull setups and bull trades. And oftentimes it'll just pause and then it'll keep going because the directional movement is still positive and blue above red negative on the bottom panel, that entire right side of the chart. So you don't want to be bearish on that. We're just trying to catch a sweet spot, though. So speaking of recent sweet spots, here's one on Netflix where you can see here that we had Netflix breaking out, same kind of thing. And here's a case where, notice the negative DMIs were actually above the positive DMIs there for a little while. And you see you had a situation here in which, let's see if I can, let's see. Okay, so essentially I'm just going to draw on it here. So you look at this, you say, okay, look at the crossover point. It's happening right there. If I zero in on that black circle, right at the close of that bar. Okay, so there's our entry. And that next bar kind of does that spinning little red candle there. A lot of people might say, oh, that looks like a reversal pattern on a candlestick following basis. I don't worry about individual candles with this system. I'm trying to find the bigger trend. And I'm saying, look, if that ADX in green rolls over, I'm out. Whether it rolls over immediately in a bar or two, remember this is a 30-minute chart, a bar or two after I get into the trade. If it rolls over, I say bye-bye. We will have those kind of trades where we get in and then it flips on us in a couple bars and we got to get back out. And that might be a 20 or 25% loss sometimes. But the principle is, that you want to make sure your position when it does trend in your favor to let that profit run. So many traders I talk to have gotten into that habit of, oh, well, if I get up 30%, I'm just going to book my game because I've seen too many 30% gains go back to break even or worse. So a lot of people that I talk to, and they say, oh, well, I'm trying to just take money as the market makes it available to me. You can't go broke taking a profit, can you? I'm saying, well, you're not going to maximize this trend following system if you cut your winners short. You make 30%, it goes on to 118.5%. You basically left a fourfold gain on that on the table. So, that makes up for a lot of small stop out losers when you can have the occasional doubles. And sometimes only 50, 60, 70% gains. They're not all going to be doubles. But the point here is that look at that next gap up that next morning. It gapped up, and then intraday it flipped down. And right in here, as it flipped down here, we're going to be getting our trailing stop hit somewhere about in this area. Now, as it turns out, the following day after that, and that's why that's 118% with a trailing stop. It was up like 150. But the principle here is that this next day when it does see the ADX bend down, you see it's about the same level, give or take. But the gap risk is always probably my number one concern with these, and I don't want you trading this strategy right in front of earnings because, of course, earnings can fundamentally completely blow up a technical chart pattern. As fundamental data changes things sometimes. So the bottom line is that we want to just focus on where we're getting those really proper patterns, and we won't have to pay up for it if we're not trading right in front of earnings either. Okay, so essentially what we're looking at here, and these are all weeklies and I got a couple questions about what series of how much time we bought, which is a good question, Carol. Basically, what we're looking at here is usually in the neighborhood of between a week and 10 days out, usually before expiration. So they're weekly options. I'll talk about those in a couple minutes. Every Friday is a weekly expiration, and for all of these FANG names, they all have weekly options going out typically at least a month to 6 weeks. So you have lots of different truly options, lots of different choices for your investment. My experience is that since we know we're only going to be in this trade probably an average of 2 or 3 sessions, then why do we want to buy too much more time? We don't want to buy a 2-day before expiration option. If we're typically on a Wednesday Thursday, Friday, we're looking to the next Friday's expiration. If we're on a Monday, we might be looking at that Friday's expiration because we still can get in and get out and not expect that we're going to get just a real time risk kind of theta decay situation. So that's important. But you see, here's a case where Google, we bought the 1120 calls just under $9. Remember that 8.99, that average entry is based on that we have some brokers who can automatically get you in and out on this FANG alert system, so you don't have to worry about missing a trade intraday. So if you're interested in more details on that, you can call us later and at 800 Big Trends and ask about how you can take advantage of that auto trading feature. So bottom line is that this is a case we're buying an 1120 call, and you see everything going. That's right off of the open on a Friday. This will happen a lot in that first half hour's close about 10 a.m. Eastern. You know, we're Wall Street time here at Big Trends. So basically, it's like, okay, 10 a.m. We're getting that big surge, and you've got to get over that thought that you say, well, gee, it was just near 11:07. And now you're telling me to buy at 11:20. You got to get over that thought that you feel like, well, I'll buy when it comes back down to 11:10. Forget that. If it comes back down to 11:10, it's probably going to be seeing an ADX rolling back down. You want to catch this window that has opened. Okay, so when the window opens, you've got opportunity. The door's open, you walk through it. The door's shut, you don't walk into the shut door, right? You don't get it slammed in your face. The principle here is that you can see what I love about ADX is that you'll see a lot of times where you'll see what looks like just a flag pattern here. It looks like things are just kind of going nowhere, and you're going, okay, well, you'll probably end up just losing patience with this and getting out. But ADX will keep on going up through some sideways churn and chop, even some counter price movement against your anticipated move if the general kind of first surge in that ADX was strong enough to tell us, okay, you know, we've got a trend in motion here. So that's what that ADX coming from a dead, and notice it was in a prior dead phase. So you've heard the old technical adage that the bigger the base, the bigger the breakout that comes after. So it's kind of that principle of, you know, usually it's going to come after a dead period, after a period where it hasn't really done much, because the ADX by definition has come from a very high level over here on the left side of the chart to a low level by the time we're ready to get our signal, right? So look at how that ADX has gone from 50 plus on the left side of the chart down to about 15. So that means you've gone into kind of Quietville. No, everybody's lost interest, and that's about the time you want to be getting interested. Okay, just some principles to think of. Now, the beauty of this is that it's kind of what I always tell people is that why would you buy when it's cheaper to rent? You know, if you're not going to hold these things for a year plus, and you don't have that kind of capital, you want to get tied up in 100 shares. For Google at the close Thursday, it was just over 1030. So 100 shares would cost you a little over 103 grand. Okay, if we buy one Google call or put, as we did last week on the bear side, that's going to not cost us more than $1,500 to control that 100 grand of stock. That's a leverage potential about 68 plus to 1 in the case of Google's example. Amazon, similar or even bigger. And so, you know, the idea here is that we would like to use in the money options, and we still will with names like Facebook when we get a signal on Facebook. As you know, it's been bearish over the last couple of weeks. But it was too stretched and it didn't set up for the right pattern, so we didn't actually trade it, even though it was close to a bear signal for us, but not quite. So sometimes we'll miss some. If a train leaves the station, I don't worry about chasing it because there's another train coming with these FANG ADX trades. But, you know, the idea is that you're getting a very much of a, you know, you can, instead of buying that house, you can rent it for a short time for the period of time you're going to be in town, and then you're going to get the benefit of all that house has to offer. But then you can say bye-bye and move on down the road to the next place you want to go, your next destination. So that's where you really get some super leverage in this case. So like Amazon's a great example. Of course, it's been up towards $1,500 plus. You know, this is a case where we bought an Amazon 1,415 strike call. So that's stock of $140,000 of stock at $944. And here's an interesting case too, where you see it after the buy signal, when it crossed up there, it really didn't do much for the next 4 or 5 hours. Really, it just started to go into the end of the session there, started to pick up, and then the gap up happened. And notice it was up there even more in that first half hour, and then started to come back down. And so when you see that, where it's not just going steady up, steady up, steady up, our trailing stop discipline will kick in. And usually it's about 30 percentage points below the peak. So this one was probably up around a 95% plus gain at that first half hour's peak on that Tuesday morning. And then it started to come back down just under 65. We're getting our trailing profit protection to basically lock it down and not let it slip. Because of course you can see how much is it going to have to come down before ADX would roll back down here. Who knows? As it turns out, ADX looks like it has the slightest little rollover a little bit later right back in here. So not too different of a level. But the bottom line is that, okay, and yeah, that one kept going eventually. But we're really picky about this because it's our testing showed that while we might be able to make a little bit more money on some trades if we stretched it out a little bit, if we waited for the DMI lines to cross, that would be far too long to wait. If we waited until the ADX was down for several bars, we would have left too much profit on the table. Our experience is that it's just better to book it when we do see that first inklings of a reversal. Another case with Facebook, and in better days at the start of this year, you can see it was blasting off at there's the start of 18 right there, okay? As it starts to rally, notice this one takes a little bit longer. And by the way, this has my big trends bands, one of my newer innovations that's actually available now in the latest version of our big trends toolkit for Metastock that hopefully Jeff will get some time to talk about with you at the end here today. The bottom line is, you see, this one takes about the fourth or fifth bar into the first day of the New Year session right there at that bar's close. At that point, I know psychologically a lot of you feel like, gee, I've missed a huge move already. But what I'm saying is there's still a big trend that's just now getting kicked off. And I love how, again, look at this little consolidation down at the end of that first trading day. A lot of you might say, it looks like it's topping out there. We just got a close under the prior bar's low. That looks like a negative candle momentum there. But look at what the ADX does. It goes up maybe a little less quickly, but it's still not rolling down, and then it surges the next day. Trend day the next day as well, gaps up on that third day, and then starts coming down, and there's your ADX rollover. That's our traditional exit when ADX rolls over. As you see, it then consolidated, went up one more time, and then it gapped down a few days after that. So if you're in that kind of, I'm going to let it ride, I'm going to try to keep on squeezing more, you're feeling good a couple days later, and then you're feeling really bad a few days after that if you're in that hold on and hope for just things to continue to go your way. So my view is catch the window of opportunity as it's open. When that shuts, you say, I'm done, I move on. And why do we not get in when it rolls on up again? Because you can see there's not an ADX setup. It's not low enough when it turns back up here on January the 8th, that following Monday, because ADX is at too high of a level. It's not the proper risk reward setup for us. So we say, no thanks. Now, as I mentioned before, weekly options, ideal for this kind of strategy. They typically used to be launched every Thursday for the following Friday. As I said, with the FANG names, they already exist for the next month and a half or so, typically on average. You've got like 6 weekly expirations to choose from because they're so active. That's why I love these names for option trading, is that they're so active that it's not you against the market maker, it's you against a lot of other traders who are just trying to take advantage of your windows of opportunity. So like the expirations on this slide would be all these Fridays. So if you were typically looking at it from the 1st to the 9th, you see that would be listed on the 1st to end on that Friday the 9th. And then we already have the 3rd week of the month is the monthly options. These just trade like weeklies in the last week of their life here. What would be the 16th? So I wouldn't list new ones here. Just put a dotted line on that at the 8th because they would already exist on the 16th. But on the 15th, they list some to expire on the 23rd, 22nd, list some to expire on the 30th. Like I said, the FANG names are already out there. So you already have this built up liquidity in all those different weekly expirations. Now, every Friday is an expiration day, and that means a lot more opportunities that you can take advantage of. So like Apple, here's a case where Apple, here is a more in the money traditional, the way I started trading this strategy even on Amazon and Google before they went up so much. And now we just adjusted our options to not have to pay too much. So you see there's our ADX upside cross at the close of that bar here. So that's right on the dotted line here of about 160. So you've got that 155 call trading for $7. That means you have a right to buy Apple at 155. It's at 160. That right intrinsically is worth $5 of that 7 right now. Why you have to pay 2 more bucks on top of that? That's the time portion of the trade. That still is a relatively small portion. It's about 70% intrinsic, about 30% or just under 30% of time value. That means if nothing happened and you sat on its expiration, the stock didn't move at all from 160, you'd be risking that $2 a time. You still have that $5 intrinsic at 160. But in this case, you can see we're going from 160 and surging on up. Again, if you're worried about the DMI positive coming down here, you were worried about that flat period into the close, then you get out too early, you leave a big surge the next morning on the table. Where does it roll over? By just the slightest of margins right in here, rolling down, you're out of the trade. Stock's about 166 and a quarter maybe. So you've moved up in the neighborhood of about maybe 4% on the stock, and your options up 73.5%. So you see we're like 18 to 19 to 1 leverage on that kind of a situation. So that's the kind of situation where we feel really good. And again, you see it edges up a little more and then it gets slammed a couple days later. So, a lot of people kind of get sucked into those moves much later in the trend. I've read some people that say, I don't trade ADX until it goes over 40 or something. They say it's really trending. And at that point, if you wait that long, you've left money on the table, in my view, and you're increasing your risk. So we don't want to do that. Another Apple example, stock, again, dead phase. ADX has been coming down. You see it's been just in this stuck trading range. And then you see there's our breakout there, Cinco de Mayo, May 5th. It's a prior example. You see the stock's trading here at about 147.5. We're buying 142 calls that are worth $5.50 intrinsically, and we're only paying just under $6. So you're really getting tremendous leverage there because you're only paying like 10 or 11% of the option is time, 90-ish% of that option is intrinsic value. So you're saying, look, that's the kind of case where as it goes from 147.5, by the time we get our ADX rollover over here, it's getting you out at about 154. Stock's gone up 6.5 points. That's, again, in that neighborhood of about a 5% rally, and it's 102% gain, more than 20 to 1 leverage. And you can see that's the big trend on that 30-minute time frame. If you want to stretch this out to position trade over the next month or so, use a daily chart and do the same pattern. Look for ADX low. We give you all of our settings when you sign up, either for the toolkit or for the FANG options trader. You can take advantage of getting all of those settings. You know exactly how you need to do this. Now, let me focus you on another reason I love these higher dollar stocks for option trades. Because here's an interesting case study. I looked at a $20 stock against a $200 stock. Each stock rises 5% in 5 trading days. So averaging a percent gain a day for 5 days, right? So it rises 5% in 5 days. And let's say it's in the last week of that option's life here. And you say, okay, if I did this where I do about 2.5% in the money purchase on a $20 stock, by the way, each one's going to go up 5%. So the $20 stock's going to go to 21. The $200 stock's going to go to 210, just a multiplier of 10, right? You would think that wouldn't this all multiply out so it should average out and even out the exact same way, but it doesn't work that way in the options pricing model. You're saying, look, on a 19.5 call, it's a $0.50 in the money. I pay $1 when I plug in these stats here. That means I have a delta of 65%. My intrinsic value is 50 cents. My extrinsic time value portion is also then 50 cents. Usually we say put about $1,000 into each trade, but just to match up on the other side, 2.5% of the money means that 195 strike call. It's 5 points in the money with a week to go. That quotes out at a $5.50 entry. That means we've got a higher delta, 90%. $5 of that 5.5 is intrinsic, only a $0.50 of time or extrinsic value. So again, $5.50 times 2 would give me $1,100 to buy 2 contracts on the right. So I just said on the left, then you'll take the same $1,100. You get more contracts on the left in green on the lower dollar. I don't want more contracts. I want more gains, more leverage. If I can only buy 1 contract, but I get much better leverage, I will buy the 1 contract rather than buying 10. Oh, by the way, that saves you on commissions too. But bottom line here is you say, okay, the $20 stock goes to 21. What's your 19.5 call worth at expiration at 21? It's worth $1.50. You paid $1. You made 50%, $550 on your 1,100. That's not bad, right? Yeah, I'll take that. But at the same time, I'll take the other one on the right even more, because if this one goes up 5% on the $200 stock, goes to 210, what is a 195 call worth at 210? I've got a right to buy at 195. It's at 210. That's a $15 value. You got 2 of those contracts. That means it's worth $3,000. That means that on 1,100, you turn it into $3,000. You made 1,900. 173%. That's greater than 3 to 1 advantage for the orange stock. 3.5 to 1, more like it, right? So basically, you say, okay, yes, that cuts both ways. That's the one caveat I would say is, If you just go in not knowing what you're doing, you're going to incur more potential volatility on the side that you don't cut quickly when it's not working. Okay, so that's why I say yes, leverage cuts both ways, but the high dollar names, if you know what you're doing, give you even more bang for your buck. Now, how about another Amazon example? And here's a case, okay, Amazon's breaking out. And again, this is where we started to have to buy a little out of the money. The stock was trading about 972 as it just starts to cross up here. By the way, notice it came close here, but didn't cross up when ADX was turned up. It didn't cross above that declining directional movement. So just because ADX crosses up from a low level, my threshold is now put into action mode when we actually see it cross above that declining directional movement, in this case, the negative directional movement, meaning you're getting less new lows. You can see it on the chart, right? Higher and higher lows, higher and higher highs. That's called an uptrend, right? So you see, again, it goes steady. And what I love about this is that you see how it had this little fake down and then back up that next morning. You see what ADX did? It kept going up. It did not bend down. So that's the kind of thing that you say, look, as long as you can follow the system and not panic off of an open, because sometimes you're going to see those temporary, what look like flips on the downside, and you go, uh-oh, it's gapping down, I need to get out. Well, no, you need to wait till 10 o'clock. You need to wait till that each half hour's close. The closes are what count. Yes, the trailing stop rules we've now put in place sometimes can still take us out. But you see that ideally you follow that through and there's your exit. The next morning it gaps up a little bit, not interested. Look what ADX is doing. It's going down. Both of these gap ups here, that one and that one, you've got a total fake out situation, not a true breakout. How about Netflix again? There's a Netflix in a prior time last fall where it was 182.5 strike call. And this is really interesting to me because look, it happened. We just crossed a moving average filter on that bar. All it's got to do is close above it. When we get the signal on this ADX cross, it's just got to close above it. There's your signal. Now look at that. We're getting the signal here. Stock's about 186. And it edges back down for most of that session. It comes back down to what, about maybe 184, just under it. So you drop a couple bucks and you don't get stopped out because ADX, you see it's fluttering there, but it's not rolling over yet. So if it had rolled over, we'd get an exit. But instead, it keeps you hanging in. So see how it's taking you away from being so reactionary on the moment by moment or half hour by half hour price points. And it's saying, give it a chance, watch every half hour close in this case, but basically don't react until ADX rolls over. That's the ideal way to trade because it's making you go from reactive to more proactive. It's not making you be so hair trigger and thus. I know some people say, I don't trade indicators, I only trade on price action. And I'm going to say, well, here, let me get you a neck brace because you're going to need it. Because you're going to get whipsawed so much if you just follow the whims of each little bar up and down that you're going to not know which way is up after a while, and you're going to be frankly cowering in a corner. You're going to be so whipped, especially in these days of the volatility we're seeing. This is what indicators like the ADX method, and this is just a taste of what you'll get in the Big Trends Toolkit, which Jeff will tell you about later, but I'm going to tell you how you can take advantage of our FANG program here in just a few minutes too, and try to leave a little time for Jeff. But bottom line is that, again, Facebook, surging, you catch that move, and we just got the examples are countless. We've been doing this now for quite a while, obviously, almost 2 years. But bottom line is that it's been really good to us. You can see I love buying an high intrinsic type of option. There's very little time in this. When the stock goes from 124, gets the exit up here about 130.5, you've made about 5% on the stock. You've made 74% on the option. Only about 15 to 1 leverage. That still works for me. So the idea here, though, is that always control your risk. Okay, I don't care how well it's going. We've had that monster January. I always tell people, don't start leveraging yourself up. Just stay consistent in your capital allocation and follow your system. It'll serve you no matter what approach you commit to on following your system. If you've got a system that cuts your losses quickly, lets your winners run, can really help you leverage your edge and keep you in the game for the long haul. Now, a lot of people just focus on volatility because they say that's the only thing in the options model you don't know. But actually, you don't know trend. The options pricing model makes the flaw of assuming that the stock's going to stay about where it's at going forward. We all know that's not the case. There's too many trends up and down. The markets are constantly changing. So I believe your strongest edge is focusing on super strong trends. Use the in-the-money options where you can, or keep them close to the money with that tight leash with ADX. It'll serve you well. You look at a couple other case studies on Google. Here's one where we got a signal right near the end of the day. You say, well, hold on, you're putting a trade on right near the end of the day. And I'm saying, yeah, because I'm believing that, as I say, the amateur hour is the first hour trading, the professional hour is the last hour trading. So, the stock was down the first part of the day there, and then you see what happens. It's getting the surge up. People are buying, the institutions are buying right near the end of the day. And that, I believe they probably have better information than you and I about what might be coming next. And so you can see it gaps up, and then we finally see the rollover point there right near the end of the next session. So it's just an example of, okay, we'll get it out to you via real-time email as well as real-time text alert to your smartphone whenever we get one of these new entry or exit signals. You see, here's a Google example. We had a bearish cross right under the moving average right as we got the signal. We're right for the first day. We're right for the start of the second day. Then it flips up on us here. There's your ADX rollover. And so when you see that happening, you say, okay, this is going to be a situation where I've got to get out there. And it does go down the next day. I kind of feel like, I left some on the table. But guess what? Look at that big gap up right here, that next day after. If you're really feeling good about yourself, if you stayed with the trade when you shouldn't have, the market has a way of taking that away or worse as it comes all the way back to the moving average filter here. So you got to be careful about that. What we do with our big trends research on these alert services is we call out the trades in real time. So we'll send you an alert through email and through your smartphone if you want to get it there. I recommend that. That's the fastest way to get the new information. It also goes to our auto brokers. You can actually help let them get in and out for you without lifting a finger. But bottom line is that whichever way you do it, we'll call out the specific trade. We call it read it to your broker instructions. Of course, most people do it online now, but the brokers get it the same way you do. So it's crystal clear where to get in, where to get out, and then we'll follow up. We'll never leave you hanging. You always know where to get out, not just where to get in. So you look at an example like Amazon, one of our best trades actually, where you see Amazon starting to trend here. And you see that first bar, it looked like it was losing momentum. It looked like it wasn't really kind of creating a little triangle or whatever. It wasn't really doing much, but it was that ADX cross that we waited for, and then you see it goes up. It keeps you in the game during these little consolidations back down. Look at how ADX flattened out but did not roll over here. And then you're off to the races the next day, out the following third morning, 168+%. So some of the keys to proper FANG trading, you've got to have some kind of a catalyst that'll drive. And this fits for pretty much any trading strategy you use. I prefer to buy in the money, but sometimes I have to buy them a little closer to the money these days, so those super high ones. These are dynamic exits. So these ADX turns are what dictate our exit. We will do the profit protection stop once we have a gain over 30%. We'll start tightening our stop so we can make sure we assure a profit. But, frankly, in a perfect world, just follow the ADX. It's really going to be your guide until it rolls over. This makes the trend truly not just your friend, but your best friend. So you're finding those best of the best trends. Now, there is no upside target cap. So that way, that's why I say don't cap your gains at a small gain when you can get those bigger ones. And then I give you the video training, all the updates on all the open positions to really take advantage of this stuff. A couple more charts and I'll show you how you can take advantage of this. And in a few minutes, I'll hand it back over to Jeff so he can tell you about the toolkit as well. But you see, sometimes like we do things like, well, we're in the Google 975 call here, 960 from early in the day. And then you see it running into the end of the day, and it's basically giving us a profit protection trail here to say we got to get out, even though ADX didn't roll over. And then you see the next day it does run some more. So if you followed ADX here, you might have made a little bit more money. Okay, so I tell people, look, if you got the stomach for it, you could keep just waiting till ADX rolls over. We find that most of our traders are pretty risk averse. They want to trend trade, but they don't want to just roll the bones. You want to have some kind of a risk management profile. So the 30% trail on our meaningful gains has really helped people feel good that, hey, we'll keep putting in new trailing stop instructions. We'll send that out to you real time. You'll know exactly where to get out whenever this thing would roll over. If you came in late, you can see the month-by-month gain. Again, past performance doesn't guarantee future results. This was assuming the time putting in no more than $1,000 a trade. Now we tell people, give yourself the potential to put in up to $1,500 a trade because some of these Googles and Amazons require a little bit more capital now that they've gone up so much. You're still getting insane leverage and you're managing it in a very sane way. And as I said, that bear example, as I showed you at the beginning, let's go back to it. Now that you know the ADX rules, you should be able to call this out yourself. You say, okay, So the criticism of ADX is that when ADX turns up, it shows you it's trending, but it doesn't show you what direction. I answer that critique by saying put the negative DMI line on there, the positive DMI line in blue, negative in red. You know that's a bear trend because the negative DMI is above the positive. We're getting a bearish trend this week in Google this past week. We're catching on the downside. The next morning it shoots down. We're almost up 100% there, and then it starts to flip on us back up, and we hit our profit trail up 60.8%. This one did save us some money because you see by the time it's giving the exit on ADX, it's actually rallied some more, and you're going to be giving back some of your put profits. So puts especially, you know how they can make you money even more quickly with the kind of stocks take the escalator up and take the elevator down. So we want to be in for that quick elevator ride down, but when it stops, we need to hop off before they shoot it back up there. So like I said, you know, the benefit of this over 20 months has been substantial. I've had a lot of happy people. And usually people pay for longer term subscriptions, but I'm going to give you a special way to get started here on the FANG options trader and try it out for a month because Metastock's been so good to me. I'm going to give you something I don't usually do. Usually a year would cost you $19.95. 3 months would cost you $5.95, a couple $100 a month. But what I'm going to do, with my thanks to Jeff and all the Metastock team, is say, guess what? I'm going to allow you to try 1 month, the next 30 days, for just $99. If you like it, I'm going to let you auto renew it each month thereafter for just $99 a month. So you're getting great savings adding up for you. More importantly, you're keeping your capital working into the new trades, so you can really then let that grow. As it grows, you're going to want to stick with it. Obviously, if it doesn't, I know you're probably going to leave. So the pressure is always on me and my team to make sure we're getting you quality trades first and getting you to where you're seeing a great ROI on your subscription investment, much less the knowledge investment you're getting with all the weekly training, all that good stuff. So all you do is you go to bigtrends.com/FANG options trader, and then basically you'll get that access. You'll be able to check it out, take advantage of it. You see, we've got loads of examples there of how that works. One thing I want to show you real quickly before we go on over into the back to Jeff is that, you know, you got loads of examples of what's worked, but, you know, we do a good job of keeping the losses controlled. Obviously, if you get a big gap against you, sure, you can get knocked on a trade from time to time. That can happen. That's why I say don't overcommit your capital. But, you know, when it rolls over, we tell you, get out. We never hold and hope. So when you go and click that orange add to cart button, just hit we've already applied the coupon to get you, there's no shipping, no tax, and basically you're not in the state of Kentucky. And basically where I am, you just hit the green checkout button and get your key information in bold. You're on a secure page. What I want to show you here is that once you get your information, whichever credit card you want to use, all that stuff, in the customer note field, if you want to get it with the text alerts, you can say, text me the alerts to whatever your number is. You know, so basically you say, okay, that's my number or whatever, and you say, okay, tell me which provider you use. If it's AT&T, if it's Verizon, if it's Sprint, whatever that is, put it on there because we put them on separate batch file lists. So that way we make sure it gets out to you as quickly as possible, okay? So whatever that is, type that in there. We'll also include you. No additional charge from us. Just make sure you have unlimited texting on your smartphone because we'll send up each new stop, each new target, each new trade. As I said, whatever we're getting a rollover in ADX, will tell you, hey, time to get out. Time to get in. We'll never leave you hanging. So all you do, review the terms and conditions, click on the checkbox. This is an auto-renewing program, so you've got 30 days to try it out. If you don't like it, let us know in the first 30 days. We give you all the instructions there. You won't get billed in the future. If you like it, you don't have to lift a finger, nor do we. It just keeps auto-billing every 30 days. If we're providing the value, I know you're going to want to keep it going at this kind of a value price, just $99 a month. Hit the submit order button. You should be good to go. So go to bigtrends.com/FANG options trader. Take advantage of that. I'm going to hand it back over to Jeff so he can actually walk you through some of those other goodies on the Big Trends Toolkit and say thanks, Jeff, for all you do to set up these great events, and definitely hang around for Mark's Sebastian's event after me. He's going to talk more about weekly options, which I know Mark and I both love. So back to you, Jeff.
All right, thanks, Price. Great job today. Okay, let's go ahead and get the audio switch back over. I do want to kind of show you a little bit of the new project that we developed, as Price kind of alluded to a little bit earlier. And I'm just trying to figure out why I'm not getting the right option to change me back to the presenter here. Here we go. Okay. We've had an extremely successful add-on for Metastock, and I'm quite proud of it. I remember we did version 1 probably 12 or 13 years ago. It was one of the first projects I had designed and kind of done in my new role here as business development. I was just brand new to it, and we spent a lot of time working on it, and it's been incredibly successful. It's right up there with one of our top selling add-ons of all time. And it's been so successful, in fact, that we're on version 3 now. We just released a brand new version of it. And as a product that we've designed and kind of tweaked and worked on over the years, as you might imagine, it's a fairly extensive product. But I'm going to show you a couple of my favorite parts of it in the next 5 minutes or so. And the big concept to remember is Price's main methodology is be willing to step over small opportunities. So let me show you a list of all of the systems that are included. These are just methods that are included. Acceleration bands, the big trend score, which I'm going to show you, the efficiency, the DMI, the force index, percentage above the 200 and 400-day moving averages are great systems. Those ones particularly look for stocks that are kind of starting to go into outer space, as Price likes to say it, where they've expended all the energy that they need to start to get some media exposure and they're just great scans that are available in Metastock. So all in all, it includes about 14 different systems, and all of those systems are going to include the work that Price has done over the years in his work on finding big trends in stocks and options. So let me just show you a quick example. We don't have a ton of time here, but this is a scan that I ran, and it came up with Walter Dunlop. The scan that we ran is actually the big trend score system, and the reason I want to show you this, there's two reasons. Number one, it's brand new to this version 3 of Big Trend Toolkit. And number two, well, it was a pretty good setup, but the reason I really like it is what it does is it's an attempt to combine the indicators that Price uses to give you really, really good setup opportunities. So very quickly here, I've attached the expert advisor. You see we had a setup here, a buy and an exit. Very good trade on this stock. Again, I just found it with a scan today. Here you've got some other setups that actually happened, but they didn't trigger into an entry until just about right here. And right now you're kind of got a pretty good trade on. Okay. Now what this actual system does, if I kind of scroll down, it's going to break down Price's favorite indicators. It's going to give you a bullish or a bearish rating. And it's going to give you basically a score that goes from minus 100 to plus 100, depending on kind of how the indicators are looking. So if you want an idea of what indicators it's kind of breaking into this, it's looking at Williams percent R, commodity channel, efficiency ratio, acceleration bands. And anytime it goes up above, let's say, I believe it's 80, you're going to have kind of this bullish score ribbon that comes up on any of the systems. Okay, so right here we would have gotten into a trade. And as with all of the Wendy Kirkland product, one of the things that you're going to see is when you get a trade recommendation, Price goes into a lot of information about how you should take advantage of that trade, what stops you should be looking at, what deltas you should be looking at, how the moneyness, whether it's in the money or out of the money, and exactly how to exit the trade. So it's a fantastic add-on. It's definitely my very first project, and one that I'm super proud of. People love this thing in any case. So here's a list of the methods that are included. It's probably, of the add-ons that we've shown today, one of the most massive. There's how the big trend score works out. But again, that's just one of the 14 or so systems that Price has designed for it. With Price's methodology, it has full implementation, so you could go in and use the expert advisor, get alerts, you can use a scanner, you can even test them to see which optionable stocks work best on any particular strategy, and a very, very good integration into the program. Now, for Big Trend Toolkit, the way that it works out is it's $49 a month. Okay. Oh, or you can also prepay it for the year. We'll give you a little bit of a discount on the yearly subscription. It'll be $495 per year. What we're going to do for the online trading summit today is, if you do want to try it out and see why people love it so much. What we'll have you do is pay for $49. And what we'll do is we'll give you an extra 2 free months with your first month. Okay. So again, to take advantage of that, what you're going to do is give us a call at 800-882-3040, or you can chat online with us at metastock.com/saleschat. Very good. Again, this is the last of the products that we'll be kind of talking about today for Metastock. I have a little bit of a training, but if I was to make a list of my favorite products, it would probably be this list. These are some of the most loved products that we have in the catalog, our best sellers, if you would. Always get super good feedback on them, and you can get them all together with 3 months of access to Metastock Real-Time and Metastock Zenith, which we talked a little bit about earlier. We'll talk a little bit more about later. You'll get 2 years of Stocks and Commodities magazine with it. You'll get the boot camp, which I'm going to do to kind of show you how to run scans step by step, how to set up watch lists, how to do pretty much anything that you want to do. That boot camp session, I run it every time we do a summit, and it's usually like 90 minutes long because we'll spend time answering any questions or things that you're not clear about. It'll also include Unleash the Power of Metastock, the course. That's normally $99. We're going to include that for free. All in all, this package retail price, if you just bought it on our website, you pay $4,000 for it. Here at the summit today, you'll pay $1,696, and I'd recommend you try it. Most of the product itself, anything that's not the subscription part of the product, is totally refundable, but you're not going to return it. There's a reason Metastock's been rated #1 in its price category every single year since like 1994. People love it. It's a great product, and this is a good way to get started with that. So call 800-882-3040. You can visit us online at metastock.com/saleschat. We've got a couple guys here. I know they're a little bit busy, but they're taking as many chats and calls as they can, and they're very thorough. They'll be able to answer any questions that you've got and help you understand exactly how every part of the package works. So I know there's questions coming in. As usual, we're running about 5 minutes over. So I will answer the questions in the chat as we go. And